It was the greetings card company Hallmark that started this modern trend of celebrating traditional and significantly historical events. And over time, different industries started building their own version of it. Now, not to be left behind, the brokerage industry started off by presenting stock recommendations on New Year's Day, which then turned to stock picks on Independence Day at the commencement of the monsoon season, which I thought was a bit weird, and also on Valentine's Day, which was super weird and absolutely not romantic. So we got exposed to a lot of these stock tips, recommendations, advice, ideas, whatever we might call it, but the real question is, do these really work? Now, answering a question like this depends on who you ask, but I'll try to be a bit scientific and let data do the talking. So I picked Diwali as my hallmark moment, and with many Indians investing during that time period, it was easy to find dozens of stock recommendations over the internet. Now, to be fair to the investor and the brokerage industry, I didn't cover just one Diwali. In fact, I covered 7 of them. The compiled data covers Diwali Day recommendations from 2015 until 2021, which came to a total of 220 stock picks. This information was sourced from 30 different research firms with a comprehensive coverage of 150 different stocks. To help out, I've attached a link to this Google Sheet in this video's description, so feel free to access and download the sheet for your own analysis. Further, against every recommendation, I've also collected some additional data points and appended them in the worksheet. This includes the price of that stock on Diwali Day, the target price that was given in the research report, then the price of that stock after an year, that is, the price on next year's Diwali, and most importantly, I've compiled data on whether or not the stock had reached its target price anytime during the last 12 months. If you're keen on compiling data like this by yourself, then I highly recommend you using the Google Finance formulas, which are available within the Google Sheets. For example, if I want yesterday's closing price of Infosys, I can simply type Google Finance in the formula cell. I then type in the stock identifier, which is NSE Infi in this case, and then I input close yes as the attribute. This then extracts the values from the Google Finance database, which was a big time saver, at least for me. In fact, the Google Finance formula can be modified to give us a number of other attributes like the stock's market cap, its P ratio, 52-week high-low, the company's earnings per share, etc. Alright, so let's get back to our analysis, and question number 1 is, how many of the 220 Diwali recommendations actually reached their goal? This came to a total of 101 recommendations, which means 54% of the stock tips did not reach their target price. In other words, the success rate of those Diwali stock tips was only 9 out of 20. Now, generally, most people don't sell their stocks even after the price has reached its targeted number. This can be due to ignorance, apathy, or perhaps it's the hope that the price will go up even further. So let's assume I am one of those people and I go on to hold those 220 stocks for exactly 1 year. In that scenario, less than half the stocks, 105 to be precise, would have made me a profit, but pleasantly the portfolio would have still delivered an annualized return of 9.2%. Now, as a number, 9.2% might seem a little comforting when we look at it in isolation, but when we put it in the context of what was promised by the brokerages and the research analysts, then you're likely to be really upset. As a matter of fact, the 1-year performance of those stock tips underperformed the Nifty 50 index returns during the same time frame. A final area of examination and something I really wanted to check was the performance of these stock recommendations over different years. The last few years have seen some real ups and downs, and understandably, none of the researchers could have predicted a COVID or the war in Ukraine. But in spite of having taken 7 Diwalis under consideration, my research shows that the stock tips given by brokerages and research outfits have had a rather poor rate of success. As a matter of fact, in 6 of the last 7 years, less than half of the Diwali recommendations actually reached their targeted price. The only exception to this was the year starting November 2020, when the stock markets were on steroids, with the Nifty 50 itself delivering a 54% return. So I hope this data presentation has helped you see a pattern. In fact, I want to talk about 4 takeaways from this research. Number 1, avoid timing or linking your investments to festivals or events. And while it might sound cool to invest on your birthday or on New Year's Day, what you should be really looking at are the trends, the valuations, your expectations, and how that investment fits within your long-term wealth building strategy. My second learning comes from the fact that with over 900 SEBI registered research analysts who track over 500 stocks, the average Indian investor has an almost limitless supply of stock tips and recommendations. But as we have recently learned, smartly deciding which ones you can afford to leave can also be hugely profitable. In that context, it's important that one goes with stock picks that give you the highest probability of success, and you can borrow some ideas from the video on coffee can investing that we recently released. But one behavior investors should be very careful of is this habit of picking stocks by first sorting them as per their upside potential. To prove a point, I went back to my Excel sheet and isolated those stock recommendations which promised an upside of 30% or more. So there were 77 such stock tips, but just 15 of them actually delivered on their 30% promise, which means there was a failure rate of 78%, which is something investors who rely on stock tips should take a note of. A third learning, or maybe it's more of a discussion, but the point is, should we sell the stock as soon as it reaches the target price? And honestly, I could not make up my mind on this. But let me present some data from the study. So I mentioned earlier that 101 stocks out of the 220 recommendations actually went on to reach their target price. Now, of these 100 odd successful tips, in 65 cases, the stock price at the end of 1 year was higher than the target price. How much higher? It was about 42% more than the target price. Then in 23 cases, the 1 year closing price was lower than the target price by about 8%. However, this price was still higher than the initial price, which means the investor still ended up making a profit on this. And finally, there were 15 cases where the 1 year closing price was not only lower than the target price, but it was also lower than the previous Diwali's stock price, which means profit milna to dur, these investors ended up making a loss on these stock tips. I think a little more analysis will be required here, but if you're interested in dabbling with this worksheet, then please go ahead. The link of the Google Sheet is already in the video's description, and if you find some new and interesting data points, then do share it in the comments box for everyone's benefit. The fourth learning that comes out of this study is that stock recommendations should never be construed as a solution to investing questions. In fact, the data we have seen shows that only 46% of the recommendations actually reach the targeted stock price, and seriously, a 46% probability of success does not instill any kind of confidence, at least in me. But that doesn't mean a brokerage authored research report has no utility. In fact, I read a lot of those reports, but I do it to get a better understanding of the industry, to deep dive into what the company does, its key drivers of success and failure for benchmarking competition, and I use them to get a summary of quarterly earnings calls that companies have with those analysts who are tracking the stock. The truth is, a research report is merely an opinion placed by the analyst on the basis of information received and some assumptions. However, that's still a one-sided way of looking at things because we still don't know what the true incentives are for the research firm to stock up or stock down a company's share price. I'm sure you've heard some stories around this, but there is no denying that there are some excellent analysts out there who do provide a lot of value. But with the data I have looked at and shared in this video, all I would like to hint at is that investors should value research reports and stock recommendations as a minor directional signal rather than a GPS guidance system. So use the information that these analysts have painstakingly compiled to improve your own investment thesis and knowledge and arrive at your own conclusions. Once again, thank you for your time. I hope you liked this presentation. Do subscribe to my channel, do share this video with others, and I look forward to catching up with you soon. Until then.